If you'd invested $10,000 in Ethereum 3 years ago, you'd have about $27,000 today. Not bad, but that same $10,000 in Bitcoin would be worth over $50,000. That's a massive difference. But what if Ethereum is about to start closing that gap? Fundstrat analyst Tom Lee is forecasting that Ethereum could hit $16,000 by the end of the year, a more than 3 times jump from its current price. Lee believes Ethereum is on the verge of its own ChatGPT moment. So, is he right? Let's dig in. First, we need to know what makes Ethereum different. Bitcoin is the first cryptocurrency, secure, limited in supply, and often seen as digital gold. Only 21 million will ever exist, a number hard-coded into its software, which makes it appealing as a hedge against inflation. Ethereum is quite a bit different, both in terms of its price history and its function. Instead of just being a digital currency or a store of value, Ethereum is more like a decentralized computing platform, which can be used to build apps. Transactions can utilize smart contracts, expanding the functionality of Ethereum and making it like programmable money. It powers things like NFTs and decentralized finance. So while Bitcoin is like digital gold, you can think of Ethereum as like investing in a foundational tech company. In terms of price dynamics, Ethereum has experienced a few major breakouts over the past few years, but it's still trading below its all-time high in 2021, which came at the height of NFTs. Given its powerful, innovative technology and versatile applications, could Ethereum be poised for a major comeback? This brings us to Tom Lee's so-called ChatGPT moment. Ethereum's smart contracts are the basis for a specific type of cryptocurrency called a stablecoin. That means it's pegged to a traditional currency like the US dollar, so its price is more stable, avoiding the notorious volatility of most crypto and making them more attractive as a currency. Since they were introduced, stablecoins have exploded in popularity, reaching more than $200 billion in issuance. Ethereum isn't the only cryptocurrency with smart contracts that can host stablecoins, but it was the first, and it's still dominant. Over 60% of stablecoins live on Ethereum. That's over $147 billion worth. This activity generates fees that directly drive Ethereum's value. Lee predicts the stablecoin market could surge from around $200 billion to $2 trillion in the next 5 years. If Ethereum maintains its dominance, that's a powerful tailwind for its price. But with all these other smart contract cryptocurrencies, why would Ethereum take the cake? Lee predicts that Ethereum will become Wall Street's preferred blockchain for one simple reason: reliability. Here he is in his own words.
Ethereum's had zero downtime. That is what matters to Wall Street. Zero downtime in 10 years. So I think that Wall Street has already decided Ethereum is the chain they're going to build Wall Street onto.
For the risk-averse world of finance, security and a perfect track record are everything. They can't afford to build on amateur blockchains. That's why Ethereum is so attractive. But one big hurdle for Ethereum and cryptocurrency in general has been regulation, which could decide if crypto sinks or swims. But that uncertainty is waning, and big regulation just passed in favor of stablecoins. That was the Genius Act, signed into law by President Trump in July. This is the first major federal framework for stablecoins. It provides the clarity Wall Street has been waiting for, effectively transitioning stablecoins from the Wild West to Wall Street. This new clarity unlocks the next huge trend: tokenizing real-world assets. Imagine buying or selling a house, a stock, or a bond with a single click on the blockchain. Faster, easier, cheaper, more secure, and more transparent. Institutions are already moving. Giants like BlackRock and Robinhood are experimenting with tokenizing assets, and they're primarily using Ethereum. The value of tokenized assets on Ethereum is already up 4 times this year to $7.7 billion. While still relatively small, that's 90% of the entire real-world asset market, and it's growing exponentially. So the bull case is strong, but there are also major risks to Tom Lee's thesis to consider. First, competition. Those other cryptocurrencies with smart contracts, they're often called Ethereum killers, like Solana, for example. It came after, but that means it improved on some things. It's faster and cheaper than Ethereum. The second risk is government competition. What if the US government creates its own digital dollar? A central bank digital currency could offer similar benefits to stablecoins, but with the full backing of the Federal Reserve, potentially crowding out private options like those on Ethereum. Finally, we have to talk about Tom Lee himself. He's a famous analyst, but he's known for some overly bullish crypto calls. In 2021, he predicted Bitcoin would hit $100,000. It ended the year around $51,000. He then doubled down, calling for $200,000 Bitcoin in 2022. It finished that year near $16,000. So can Ethereum overcome its lag and hit Tom Lee's $16,000 target? On one hand, you have a perfect storm brewing, with huge potential for institutional investment and widespread use. But on the other hand, fierce competition, the threat of a government-run digital dollar, and an analyst with a history of bold predictions means nothing is guaranteed. Ultimately, nobody knows if Ethereum will see a big surge or keep hitting this multi-year price ceiling. While the fundamental drivers are undeniably bullish, whether Ethereum reaches those lofty heights will depend on how these powerful forces of innovation, competition, and regulation play out. At Capital.com, we'll keep you posted on price movements of Ethereum, Bitcoin, and other cryptocurrencies. Hit like and subscribe to stay tuned. Thanks for watching.